Welcome to Markets Today. I'm Reema Tendulkar in the Mumbai News Center, and I'm joined by Surbhi Upadhyay from Delhi. And we've begun the budget week with some trepidation. Markets slip in the second half of the trading session to end the day around that 8750 mark. The Sensex loses close to about 250 points. And Surbhi, to add to the volatility as well as the volumes, we've also got futures and options expiry this Thursday. Hi.
That's right, Reema. Hi. Yes, a little unnerving, the manner in which the market just completely fell off the cliff and then it kind of didn't really recover from there. We'll talk about that and a lot more over the next half an hour. Let's start with the headlines. Markets registered a sharp crack in the second half of the day with the Nifty falling below 8,800. The Sensex gets knocked down by over 250 points. The Midcaps lose about 1% as well, falling in line with blue chips. Energy majors RIL and ONGC, all along with FMCG big boys HUL and ITC lead the fall.
The budget session of the Parliament kicks off with the President Pranab Mukherjee urging the parliamentarians to work together with a spirit of cooperation. The government hopes to get 8 key ordinances passed during the session. Meanwhile, Anna Hazare takes on the government over the land ordinance, announcing a 2-day agitation.
In mid-cap action, infra names like Gammon India and Madhukan projects buck the trend, gaining between 11 to 15%. Bharat Ispat gains over 9% after winning a coal block in Chhattisgarh. Asiana Housing surges 13% on a new project launch. And select railway stocks continue to seed buying before the railway budget.
Okay, and here are the experts that we've lined up for you on the show tonight. Sanjay Dutt of Quantum Securities will tell us where he sees the Nifty going from here on. Neem Kumar of IIFL will give us his take on the markets. And with just about 4 days to go for the budget, Neelkant Mishra of Credit Suisse and Shobna Bhatia of Hindustan Times will talk about their expectations from the budget.
Alright, but first to the day that we've seen late drama on the Lal Street. Once again, the day started off on a strong note only to take a turn for the worse after lunch. Anuj Singhal is now joining in with a wrap of the day's trading action. Anuj, what do you think led to that massive sell-off in the second half?
Well, late slide for the market. What's interesting for this market is that it's lost leadership in the form of Bank Nifty. And in late trade over the last 2 or 3 days, Reliance is dragging the market and quite a bit. Today also the Reliance stock was down 3%. It was below 850 and that's impacting the market sentiment. And the market sentiment has taken a turn for the worse over the last couple of days, and that's impacting the overall market scenario at this point in time. So much so that the Nifty not only breached 8800 but effortlessly went to 8750 as well. In fact, the last trading price on the Nifty was below the 8750 mark. Let's talk about some of the stocks then that dragged the markets, and right on top really has to be Reliance. That was down 2.5%. HDFC was down 1.5%, ITC was down about 1.5%. So the three heavyweights were dragging the market quite a bit. Apart from that, as I said, the banks have lost leadership, so all the banking stocks were dragging market quite a bit. And more disturbingly, most of these stocks were in the green in the first half, but came into the red in the second half. So stocks like SBI, Axis, HDFC Bank, they were all down in today's trade. Some other prominent Nifty losers included stocks like Z, that was down about 4%, was the top Nifty loser in fact. Lupin, where there was the form 483, which a lot of analysts get nervous about, that stock was down about 2.5%. GAIL was down about 2%. And finally, some more Nifty losers included two stocks which are going out of the index, DLF and Jindal Steel, and Tata Steel was down 2% as well. On the mid-cap side, it was a bit of a mixed day, though the high beta space was down quite a bit. If you take a look at stocks like HDIL, IFCI, P-Power, most of these stocks were gaining all through this month. But today you saw big losses in all these names. But there were some other stocks that stood out, stocks like Rolta. That was easily your stock of the day in terms of gaining stocks. Mozabear up 10% and Monet Ispat as well up about 10%. So 3 days to go for a crucial expiry. After that, of course, the countdown to Saturday budget. But as of now, it looks like the 9,000 peak might be a bit too much for the Nifty to overtake for now.
Thanks, Anuj, for running us through all those details. It's time now for some market opinions. Sanjay Dutt of Quantum Securities expects the Nifty to touch the 9,500, 9,800 level in the next 12 months. But he says that one should not expect any major changes on the tax front in the budget on Saturday.
Markets are positioned for doing nothing really till the budget comes out. we are on the upper end of the trading range because valuations are pretty stretched. I think not more than about 5-8% from here, which means about 9,800 on the Nifty. I don't see anything more than that. In the budget also, I'm not expecting much of tinkering that normally happens. An incentive here and a tax slab there, etc., etc. The budget needs to be a radical, out-of-the-box, new idea budget, and if it's not that, I think the markets would sell off quite aggressively. If the finance minister does deliver truly a Modi government budget, then I think we are in for a big run post-budget and maybe just about 5 to 7% immediately after the budget. All the positivity that's coming out of what Mr. Prabhu would do is built into most of the rail and rail infra stocks. What's really got to now translate into action. Some real kind of bite the bullet decisions need to be taken, and not just we will set up bullet trains, etc., etc. There are core issues that are plaguing the railways at this point of time, and those need some radical thinking and radical action, actually, more than thinking.
Okay, that's opinion on the markets. Let's figure out what was going on in the futures and options space and if there was any volatility in F&O which led to what we saw in the cash markets. Nigel D'Souza will have some answers for us. Nigel.
Well, it's not looking very good in terms of the options data. So the 8,800 put, we saw the premium over there move from around 50 rupees to around 90 rupees. Remember, that was where there was the highest open interest on the put side. So the writers of that particular strike, they started unwinding their position when the Nifty broke that 8,750 level. On the flip side, the 8,800 call, the 9,000 call as well was seeing aggressive writing over the past few days. And today as well, we saw aggressive writing at both those two strikes. But what is worrying is that now we are seeing some writing at around that 8,800 level. So the ceiling for the Nifty, in fact, has fallen from around that 9,000, that 8,950 mark, all the way to around that 8,850 odd mark. The 8,700 put as well, if you were buying that particular strike, the premium went up from around 23 rupees to around 43 rupees. So big money being made for those put buyers as well. But the reason that the Nifty was lower is because we saw some unwinding on a couple of heavyweight stocks. HDFC Bank did see some unwinding pressure, ICICI Bank as well did see some unwinding pressure, and SBI as well did come in for some unwinding in today's trade. From the F&O stocks, Wokout stood out. That stock in fact came in for a short covering bounce, while the likes of Apollo Tyres as well as ICI, both of them were getting sold into in today's trade. HDI has been a big gainer in this series. That one in fact did come in for some unwinding pressure.
Okay, and Nigel, stay with us. You've also been tracking the recent coal block auctions very closely. Round one of the auctions is over, with the exchequer gaining close to about 1 lakh crore rupees. 18 mines have overall been auctioned, with total reserves of close to about 90 million tons. So give us an update. Who were the key winners and who were the key losers?
Well, in the final leg of the coal auctions, Hindalco went ahead and secured themselves. They won the Gare Palma 4x4 mine at a price of around 3,000 rupees per ton. It was a rather small mine, and with a mineable capacity of around 1 million tons odd. This mine was won by Hindalco from Jaiswal Nico, so that stock in fact was lower in trade. Hindalco opened higher but ended lower. Now in all, Hindalco has secured themselves with 3 coal blocks. One is the Gare Palma 4x4 coal block, that was at a price of 3,000 rupees. The Gare Palma 4x5 coal block, that was a price of 3,500 rupees per ton, while the Kagautia coal block, they secured at a price of around 2,860 rupees per ton. All these 3 coal blocks will meet nearly around 20% of their total requirement, and put them together with the amount of coal they'll receive via coal linkage from Coal India, that's nearly around 5 million tons approximately. Hindalco's Hirakud as well as Aditya smelters, they're nearly around 450 to 550 kilometers away from the ports, so it is imperative for them to win these mines. Sesa Sterlite as well was in focus. That's because Balco won the Gare Palma 4x1 coal block. This mine was won from JSPL, and remember, it is a rather large mine because it has a mineable capacity of around 6 million tons on a per annum basis. So Balco in fact just last week they also had won the Chotia coal mine. That was at a price of around 3,000 rupees per ton. So with these two wins, Balco has secured themselves for nearly around 55% of their total coal requirement. Put that together with the total amount of linkage coal that they get from Coal India, that's around 15%. So 75% of BALCO's total requirements has been secured. Lastly, Monnet Ispat as well was higher in today's trading session. That's because they won the Gare Palma 4x7 coal block. That was won from Sarda Energy. So Monnet Ispat in fact was higher, while Sarda Energy did see some selling pressure.
All right, thanks Nigel so much for that. So there's just a 1 or 2 day breather before the auctions resume on the 25th of March. Let's move on. The much awaited budget session of Parliament kicked off today with President Pranab Mukherjee urging parliamentarians to work with the spirit of cooperation. Apart from the union budget on the 28th of this month, the government is looking to push 8 ordinances. Crucial among these would be insurance, coal and land acquisition. In the budget itself, some of the key things to watch out for would be some movement on the constitutional amendment bill on GST and push for some of the government's pet projects like Digital India and Housing for All. Here are Shobna Bhartiya of the Hindustan Times and Neelkant Mishra of Credit Suisse on what they expect from Finance Minister Arun Jaitley this time around.
This budget, there are huge expectations. People feel this will be the first major big policy pronouncement of this government. So people are expecting a lot of big ticket items. I personally feel that, there's not a magic wand that somebody can wave. I personally feel that the budget should be growth oriented, but it may be many small things done right which will actually give an impetus as opposed to one huge big announcement. So I don't know if there's that one big idea that people are looking for, but I think overall one can expect a good budget. One can expect a budget that's very sort of pro-development, that will spur growth.
They should spend on housing and they should spend on rural roads because these are things, and especially the housing, given what China went through over the last 5 years, and the aftermath is a bit undesirable, but if you go from 3 trillion to 9 trillion in GDP, having 3 bad years after that, I don't think is that bad an outcome. And similarly the US 2001-2006, now the US model was clearly too risky, ninja loans and all that. I think the Chinese model of state investment in low-cost housing was actually perhaps not something that will work in India. So an interest subvention on 15 lakh or sub 15 lakh houses, construction tax, service tax waiver in construction, possibly even a capital gains tax waiver. And suddenly thousands of contractors all over India's towns become active. You start seeing demand for cement and steel.
Okay, moving on. Starting the 1st of April, a category called restructured assets will not be available to banks. They have to classify their stressed accounts as non-performing loans and make higher provisions. But despite the 31st deadline drawing near, banks are not rushing to restructure before the window closes. CNBC TV 18's Ritu Singh has some very interesting details. Ritu, what are you picking up?
Rima, it's very clear that in the system there's a large amount of stress that is still present. I mean, PSUs have been reporting over 6% NPLs, but as far as restructuring is concerned, banks seem to be in no rush to take that route. Now remember, once the new deadlines kick in for restructuring, banks will have to term any restructured loan as an NPL and hence have to provide more. Now just to put some numbers into perspective, last year the number of cases that were referred to the corporate debt restructuring cell was 101, amounting to about 1.3 lakh crore rupees. But this year, that number is not even 1/5 of that. In fact, only 25 cases have been referred to the CDR cell so far this year, which amounts to about 23,000 crore rupees. And although there's one more month to go for the quarter to close, bankers are not expecting a rush for restructuring. Now, this is widely because of a couple of reasons. One is the introduction of the Joint Lenders Forum. The new guidelines make it more stricter for banks to take corrective action in terms of when a stressed asset is not repaid dues for over 60 days. Secondly, a lot of infra companies that had seen a lot of pain in the last couple of years have already gone into restructuring. Thirdly, the banks are hoping for some sort of a turnaround in the second half of this year, and hence they're in a wait and watch mode before they take this restructuring action. And lastly, a lot of restructured account, if you see it in banks like ICICI Bank, almost half of the NPLs have come from the restructured category. Therefore, the banks are actually worried that restructured accounts are already tipping into this NPL category, which is why we've not seen a rush so far. Of course, some big cases were referred, including the likes of Unity Infra Project, Lodha and Spat, and many others. Clearly, there's still a lot of stress in the system, but bankers clearly don't think that restructuring is the way out.
All right, Ritu, thanks so much for that. We'll take a quick break on that note. But coming up, Sudarshan Sukhani will be joining in for a technical chat. We'll, of course, as usual, get you some trading ideas as well.
Aditya Birla Group presents Budget 2015, the Make in India Budget. Co-presented by SBI, only on CNBC TV 18.